ForegTV.com. It's Wednesday, January 30th. I'm Remy Hokie with a breaking news report. The Federal Open Market Committee cut the benchmark interest rate by 50 basis points to 3%. The Fed also reduced the discount rate by 50 basis points to 3.5%. The decision was not unanimous, with Dallas Fed President Fisher preferring to stay on hold. In post-FOMC trade, U.S. equities are rallying, with the Dow initially gaining over 100 points. We're also seeing the 10-year bond climb on the news. Dollar-yen is now trading around 107.10, euro-dollar at 1.4866, and sterling-dollar at 1.9918. Now we're joined by John Person, President of National Futures. Good afternoon, John.
Good afternoon, Remy. Thank you for having me on in this exciting, eventful day.
Thanks for joining us. Well, we finally had the Fed decision out, so if you could give us your commentary post-FOMC and what this means for U.S. dollar movement.
Well, obviously, the dollar weakened on the news immediately, and I think there was the fact that, as you mentioned, the dissension amongst one of the Fed voting members, Mr. Fisher, kind of spells a little bit of relief that maybe not the economy's not as bad as the recession talk was, and so this may give inflation hawks and dollar bears a little bit to grit their teeth on. In other words, don't get too bearish in the hole, so to speak, on the U.S. dollar. This last rate cut really probably, if you look at inflation-adjusted figures and the core PCE numbers, inflation figures, it's almost we're at probably a negative interest rate level right at this point in the market. So I think that it gives a lot of impetus for the economy here in the U.S. to improve, and longer term that may just be bullish for the U.S. dollar. I'm surprised that the euro currency hasn't rallied even further than it has, and so I think that 150 mark must be a very top-heavy ceiling. And it's going to be important not just to see where the market closes today, folks, but also to see how the market ends this week with the monthly unemployment report coming out on Friday. So you may be surprised to see a reversal in the U.S. dollar from these lows as it's scraping against a bottoming formation. And that's my overall opinion here at this point in time, especially with today's interest rate announcement.
Okay, John, one last question for you right now. Now that the benchmark rate here in the U.S. is at 3%, tell us how this affects rate differentials and what it means for the U.S. dollar against the majors.
Well, I think people were widely counting this half rate cut baked into the marketplace at this point. Interest rate differentials, it's not a matter of interest rate differentials as much as it is where will foreign investors and U.S. investors get the most bang for their currency or their buck. And I think that if the U.S. economy is salvaged from a deeper recession by the liquidity that was been added by lowering of interest rates, if banks can reduce their restrictions on lending policies at this point in time, I think that the U.S. economy may come out of this a little bit unscathed, and we could start to see going into the second quarter, maybe the housing market improve a little bit, and that may give a little bit of boost for the U.S. dollar. So the interest rate differential isn't right now, in my opinion, as important as where's the best value for investment dollars. If I was a foreign investor right now, and I'd have to look at, say, U.S. equity markets, I'd have to look at seeing where my currency value. So if I'm owning euro currencies right now, I'd have to say, where's the best investment? What has great value for me? And I think that right now it's here in the U.S. and also in Asia. So I think that may be something that you look at the euro-yen cross, and you also look at the euro against the dollar, and that's probably why that 150 mark in the euro currency is going to act as a ceiling of resistance going forward.
Okay, John, thank you very much for joining us after the Fed decision. This has been your Forex News with John Person, President of National Futures. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.